Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast, joined right now by Carol Massar and Tim Stenovec. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube. And Carol, it's been an incredibly wild week. You go back to those first 2 days where it looked like this market was ready really to sort of take this rally to a new level, and a lot of that being unwound over the last 3 days.
Yeah, really, the juxtaposition of those two things. Keep in mind, we were just talking with our market guests, so we are on track for the best weekly gain in the S&P in about a month. At the same time, we are on track for the biggest drop, daily drop for the S&P in about a month. So that just plays to exactly what you just said, Romaine.
Yeah, we spoke to Brian Jacobson, Senior Investment Strategist at Allspring Global Investments just now, and he said not necessarily get used to days like today, but choppy trading, and not just till the beginning of next year, really until the end of next year. He said that until we start to see, 4.5% or 4.75% from the Federal Reserve, and then they're going to hold it for a while, that's, we got to see evidence of an actual pivot there when it comes to interest rates, and that could be the end of next year.
We've heard even more bearish calls than that, Tim, on TV, talking about the lost decade, maybe at least another lost couple years, just as you mentioned as well, 2023 and beyond. I think, Caroline, for me, what I've been really thinking about with all of these analysts is you need peak yields and a few more months after that. You really need the Fed to understand that they're holding tight for some time, and the markets are going to have a hard time, as Ed Clissold told us, turning around before that point.
And the Fed potentially breaking something. That's something we keep hearing. Voya saying a little bit earlier, the cracks perhaps in the bond market are already signs of this.
Yeah, a lot to keep an eye on here. The final seconds of trading on this Friday afternoon. You're taking a look at a Dow Jones Industrial Average. It's going to finish the day down by more than 600 points. That's down about 2% here on a percentage basis. So we should point out on a weekly basis, the Dow Jones Industrial Average still in the green by about 2% here over the last 5 days. S&P 500 down 104 points, or about 2.8% on a daily basis, higher on the week by 1.5%. The Nasdaq Composite down 3.8% here on the day, higher on the week by about 0.7%. Meanwhile, the Russell 2000 going to finish the day lower by about 2.9%.
Yeah, and we did see an uptick in terms of volume compared to what we've seen in the past 5 days for the S&P and the NASDAQ. So looking certainly picking up some momentum. Hey, just want to mention, Taylor, about 474 names in the S&P lower today, 29 higher. So pretty broad-based in terms of the selling.
Yeah, I see that here too on some of the individual sectors, Carol. So you're smart and right, really, to point that out. Some of the, quote, best performers are still very much in the red. I'll point out energy sector. It's off about 0.7%. It's a huge winner for the week, though, still having one of the best weeks that we haven't seen since March, as you've looked at a lot of the production cuts and a rebound in oil prices. So energy's off today, but otherwise it really has been a bullish story for the year. Everything else, as you can see, a lot of red on the screen as well. Take a look at, well, it's media, it's technology, it's software and service, it's semiconductors. We've talked a lot about AMD that's off 13%. So all of those sectors, if you think about those long duration equity assets, those are off 4, 5, almost 6% as well on the day.
Pretty significant, though, that energy also down today. Pretty wild to see that. All right, let's get to some of the gainers. Fingers crossed that they hold, and they have. DraftKings, which was up 8.8% at its highs today, finishing with about a 3.3% gain. You know the story. It's on the Bloomberg. Walt Disney's ESPN nearing a large new partnership with DraftKings, according to people familiar. So that certainly got a kick to the upside in today's session. Cano Health also kind of special situations playing out today. News that CVS is said to be in exclusive talks to buy Cano Health, according to people familiar. No certainty, though, that a deal will be reached, but nonetheless, this name was up 9% in today's session, so holding on to most of its gains today. And then we had Dexcom. It was topping the S&P 500 and the NASDAQ 100, surging. Analyst positive after a Medicare update on coverage for its glucose monitoring, and so expanding coverage. Analysts weighing in. Dexcom makes those monitors, so this has been a good thing for them. That stock, again, up about 7%, Tim, in today's session.
And that's actually the biggest mover on the week in the S&P 500, too, up about 27%.
Yeah, really significant. Thanks.
We got some superlatives on the downside as well. Let's start with AMD, Advanced Micro Devices, finishing the day down by more than 14% today. That was one of the companies that ended up moving lower today. What I'm looking at right now is AMD being the company that is at the bottom of the S&P 500. It's biggest drop since March of 2020 on a percentage basis down there. After the bell, we got preliminary third quarter sales numbers that they missed projections by more than $1 billion, blaming the PC market for hurting sales, citing weaker demand and a buildup of inventory in the supply chain. It's hitting other companies as well. It's ended up hitting it ended up hitting NVIDIA, certainly weighed on the entire chip sector. We got disappointing results from Samsung as well. And then, Carol, you mentioned the Cano news. CVS Health also finished the day down by more than 10%. So a double whammy here. We did speak to Jonathan Palmer over at Bloomberg Intelligence, senior healthcare analyst, and he ended up saying that it wasn't just that Cano deal that weighed on CVS. It was the Medicare health insurance plans that lost ground in U.S. government quality ratings today. He actually argued that that was a bigger hit on the company's stock today.
Meanwhile, let's have a little look at what happened cross-asset for a moment, because it was a day where, well, interestingly, oil defied everything. We still are more worried about the production side, the cuts, the OPEC plus talk, than we are about the demand pullback that potentially a more hawkish Federal Reserve signals. WTI crude up 4.7%, Brent crude up 3.6%. Natural gas actually rolling over as we are less worried about the production side of natural gas here in the United States. But really, this spoke to, therefore, some outperformance of the Canadian loonie with the outperformance in the Norwegian krone, but in general, this is a story of weakness versus King dollar. King dollar back on top as we see resilience in the jobs market. That means the Federal Reserve is not for turning. So we see a dollar index that is strengthening by 0.4%. We see the Kiwi off by almost a percentage point. We see a really Aussie dollar feeling some of the pain about the metals. And I'm looking at sovereign bonds just across the board. Yields push higher, whether we're in Europe, Italy up 20 basis points on a 2-year. We're seeing some talking tough across the more hawkish central banks, Taylor.
It is a hawkish central bank that continues to move front end, middle, long end yield curves for the day and for the week as well. On the day, you're looking at yields that are still up about 6, 7, 8 basis points all the way across the curve. Carol, for us on TV, we've been talking about the big superlatives of a 2-year yield that's up about 5 straight weeks in a row, and a 10-year yield that is now climbing for 10 straight weeks. That is the longest streak since 1984, when 10-year yields jumped about 12 weeks in a row. So there has been just sort of this consistent theme and consistent narrative, and a long-term 1-year GP chart. It's deadly scary.
All right.
How quickly this has changed.
It's really hard. It does feel very harsh. And when you think about that trend line, especially when it comes to yields, right? Because how long have we been talking about where do we top out in yields? Where do we bottom out in the equity play? I'm thinking about next week a little bit in terms of what we'll see in retail sales, what we're going to see when we start to get earnings from the big banks, and what kind of clarity we get about what the business environment. I want to know about loans. I want to know about consumer credit. We got to read on it today. I want to know what it says about the outlook, and maybe that'll help us give us some clarity.
Another weather warning from JP Morgan's Jamie Dimon.
Well, I mean,
right.
In all seriousness, I do want to start to understand if we are starting to see cracks when it comes to the consumer, if we are starting to see financial conditions tighten, not just for businesses, but for individuals as well. I mean, I was struck a few weeks ago talking to the CEO of a regional bank who said that he still sees consumers in a really, really good place. And when are we going to start those savings, to see those savings being eaten into with these higher prices?
Yeah, I mean, it'll be interesting, too. I'm actually looking forward to the FOMC minutes, because I think when all the talk we had about the pivot earlier this week, the question is, was there any sort of serious discussion about either pausing or at least sort of maybe slowing down the pace or the severity of these hikes at that last meeting? Based on anecdotal evidence, it doesn't seem that was the case, but the minutes, of course, will reveal whether that was true or not.
And whether the inflation print is going to give any sort of food for thought to the investor base who just want to try to push away from what the Federal Reserve might be doing. CPI likely to run at 8.1, I think it is. I mean, we're still, as you mentioned, PPI is going to be there. And what is the strength of the consumer, not only in the bank's earnings, Caroline, Tim, but also, Taylor, within the retail sales coming at the end of the week?
And if we're pausing some of the hiking cycle to see how all of this plays out, how long are we staying in that restrictive territory? I don't think a lot of people think that we're going to be cutting in 2023. We could just be not hiking, but that doesn't necessarily mean that we're cutting.
Yeah, and good point. And then again, you go back to the data. If we continue to get strong reports, relatively strong reports like the jobs report, and more importantly, some of those retail sales numbers, if people are spending, I don't know. I mean, there's the winds at the Fed's back, so to speak.
Did you guys see the Atlanta Fed, the GDP Now model? I was just checking this out. Came out today. It was an update. Estimate for real GDP growth in the third quarter of 2022, 2.9%. For today, it was up from 2.7% on October 5th, and this is coming after taking into the data today. So to see them kind of be upbeat about, I know it's
Well, it's a real-time number. I
backward-looking,
mean,
but-
obviously it adjusts every time they update here, so it's kind of a reflection of where we stand in the here
On
and
the
now.
data points,
Where,
yeah.
Whether that's going to be true a week from now or not. But like I said, if people continue to spend, then sure, why not?
Yeah, but-
I'm actually, you know, Carol, I'm actually going out to Jersey this weekend. So wish me luck. I'm a little afraid.
I'm
Yeah.
sorry.
Are you going to visit
I'm
Carol?
sorry.
Yeah,
Did you get your clearance
Did you get
papers
invited?
to
Did
come?
I?
Did you
no,
get
no,
invited
oh,
to
no, no, no.
pizza?
I haven't been invited to the Massar household.
Okay.
One day, maybe. A man could dream, but no, you know. So, but you know, I have to,
Enjoy the Garden State. It's gorgeous. you know?
I'm told. Yeah,
Yeah.
I'm a little worried, but we'll see.
Nice. Spend some money. help
Hopefully,
the
I make it
economy.
back on Monday.
Okay.
I heard it's dangerous over there.
We'll be lost without you if you don't come. All right, guys, have a good and safe weekend. We'll have lots to talk about next week. All right, that's a wrap for our cross-platform coverage. Beyond the Bell, radio, TV, YouTube. We will see you again, same time, same place on Monday.